want to go through is many of you got that alert today on how we recommended selling a 10% of new crop corn when we had these futures around 580 a bushel, and just really want to go through with you on the whole thought process on what we're seeing in here on the corn market specifically. And we're going to also get into beans and wheat a little bit towards the end. But our first chart in here, this is a December monthly continuous corn chart. This is just a December contract going back nearly 20 years. And that red horizontal line that we have on there is at 580 a bushel. Well, we had it at 580. That was about today's high or yesterday's high in that range. The other thing that was important about 580 is looking at this monthly chart. That was the high close on the monthly chart for the 21 crop year. So our thinking is that we're finding some resistance in here, going to be in this $5.75 to $6 range when you look at this chart. Okay, now if things get hot, or if you look back to 2008 or 2011 or 2012, when you had those big runs higher, it took something more along the growing season, okay, and crop issues in the U.S. to see that kind of push than any other time. So, we're just kind of comfortable sitting in here right now, the first part of February, rewarding this rally at 580. The other thing that has our attention, and this is a chart, the top chart in here right now is a spread between March of 22 corn and D's 22 corn, an old crop, new crop spread. And the bottom chart is just a straight March 22 corn futures. Well, if we look at that bottom chart in here right now, and you look at that red line, that's at 640. That's also the high that we had in May. And as you can see, we bumped up to the 640 level here last week. Then we recovered in here early this week, now backing off a little bit. And recently, with the bean market trading higher, the corn market has lagged behind. So that was one sign. And then when I get to that top chart, you look at this market in here right now, that actually old crop is kind of leading, new crop is leading the rally in here, where old crop is lagging behind a little bit. That's considered bear spreading in futures in here, and that's a warning sign that a near-term high could be in place. When I get back to the D's 22 corn chart right here, the horizontal red line is at 530, and on our report, we recommended making our first sale at 530. And the reason we did that in the early fall time frame is we kind of looked back and said, look, there's a double top in here at 530. In hindsight, we regretted not making a sale. 530 is a good value to protect. Let's get started at this level. Let's make that 530 sale. Our next target in place then as well, if we got to 550, we need to think about it. We ran to 550 quickly, and we decided to wait. Now, as this market chopped around it here and gradually moved higher, we are pulling the trigger up here at this 580 level just to get a little bit more new crop on the books. Now, just looking at this chart here, if we close back below the 50-day moving average at 557, we might have to look at selling a little bit on the way down. But we wanted to give you the reasons why we encourage producers to make a new crop sale in here and why we like making that additional sale at 580. We also want to visit this week just where world prices are at. And we have on the chart or on the table in front of us where prices were at to the U.S. Gulf and France and Ukraine on January 11th, again on February 8th, and then the change. You can see U.S. corn at the Gulf in January is at 704, and now here today it's at 742, up 38 cents a bushel. French corn gained 31 cents in that time frame and at 719. Ukraine corn gained 18 cents and is at 721. The U.S. is really leading the world market higher. That's a reason why our exports could slow down a little bit, as we are not the most competitive on the world market. So we need to keep that in mind on the remainder of our old crop corn. As I get over to the soybean market here, and this is where all the volatility has been, you can see U.S. beans at the Gulf have rallied $1.98 a bushel in the last 4 weeks, while Brazilian beans have gone up $2.35. That spread between U.S. beans and Brazilian beans at the port has really narrowed up from U.S. beans being 40 cents higher in early January to now only 3 cents higher. We need to keep in mind with freight rates, it's about $12 a metric ton or 33 cents more a bushel to ship beans from the U.S. Gulf to North China compared to Brazil to North China. So sitting here right now, Brazil beans are still offered cheaper than old crop U.S. But when you get out to the new crop contract, U.S. beans are more competitive. Now we're going to quick go to a March 22 bean chart. Okay, we've had this big rally over the last 4 weeks based off of South American weather, discussions on what the crop size is like, but more specifically, spec buying has been massive here over the last 4 or 5 weeks. And one thing what the speculators have done is they've found some success in beans. That's where you've had this further push in the market. We don't want to leave out wheat here, and we just need to point out that U.S. wheat is just not competitive on the world market. You can see over the last 4 weeks, U.S. hard red winter wheat has gone up 34 cents a bushel, while French and Ukraine wheat has actually gone down. The reason why export sales on wheat are extremely poor is we're just not competitive. When we look at this, what tells us if we can rally on new crop wheat is we're really going to have to come down to U.S. weather. We're going to try to use this bump in here and look at getting a little more new crop wheat protected. Now here are some final thoughts in here. We do have a supply demand report out tomorrow. Depending on the volatility with that, we might come back with another webinar or just discuss it on the report. It just depends what the USDA gives us. But here today, what's really being determined in the market or being debated is the South American crop size. Right now, Mato Grosso, which raises about 30% of the Brazilian beans, it was put out today that they're 47% harvested. Their local government came out and estimated the Mato Grosso bean crop at 39.5 million metric ton, up 1.3 million metric ton from December, and up 9.5% from last year. Now, we need to acknowledge that Mato Grosso doesn't produce all the soybeans. It is just one state, but it is the largest in here right now. So everyone who's betting on a further drop here in crop sizes or a sharp drop in crop sizes, this is just a little bit of a warning sign in here that maybe the crop down in South America is getting a little overhyped on how low it could be, and that the race to the lowest yield is really in place. As we move ahead, we really think on the bean side, it comes down to what do the specs want to do. Okay, if the specs want to come in here and continue to buy, hey, we have a little more upside potential. If all of a sudden they decide that their plate's pretty full and there's not the news to get this thing to that next leg up in here, this is a market that can quickly retrace back. This past June, bean futures lost $2 a bushel in 6 traded sessions. We're not saying that's going to happen in here now, but this volatility is going to be there and it is going to stick around. When we look towards new crop, whether if it's corn, beans, or wheat, it just comes down to we've got values that we need to protect. That's really why we like protecting or making a new crop sale on corn. Watch the spreads. We highlighted the corn spread on this report just this week. Old crop, both Chicago and KC wheat, went below where new crop is, putting a carry in there. And you got to keep an eye on beans. Where right now, July beans are carrying a $1.50 premium to new crop. Yet China is buying new crop beans on the export business. We think that spread on beans needs to be watched and is sitting too high in here right now. Thanks for tuning in. We'll update our daily advisory report. We got a big supply demand report in here tomorrow. Any questions, make sure you give us a ring. Have a great day.